Inflation, the invisible force that erodes your purchasing power, is different in every country. Some nations experience low inflation, while others grapple with much higher rates. In this video, we'll assume a 10% inflation rate, a significant challenge, and explore investments that can help you outpace it. Inflation refers to the rising prices of goods and services over time. For example, if inflation is 10%, a loaf of bread costing $3 today will cost $3.3 next year. If your investments don't grow by at least 10%, you're effectively losing money. Let's explore strategies to beat this high inflation rate. Inflation rates vary globally. In the past 5 years, the USA averaged 3.96%. India averaged 5.57%. Argentina is battling an inflation rate exceeding 200%. To keep things simple, we'll assume a 10% inflation rate for this video and show investments that can outperform it. If you invest $100 at an 8% return, it grows to $108 after a year. But with a 10% inflation rate, the same $100 item now costs $110. Your purchasing power decreases by 2%. This is why it's crucial to choose investments that consistently outperform inflation. Our first investment idea is stocks. Equities, or stocks, are one of the best tools to combat high inflation. Historically, stocks have delivered average annual returns of around 10 to 12% over the long term. For instance, a $1,000 investment in a high-growth stock like Tesla or a tech-focused ETF could yield returns exceeding inflation, though volatility is a factor to consider. Our next investment idea is real estate. Real estate not only appreciates over time but also generates rental income. In markets with high inflation, property values often rise at or above inflation rates. For example, a $200,000 property appreciating at 12% per year would grow to $224,000, significantly outpacing 10% inflation. Our third investment idea is commodities like gold and silver. Commodities like gold and silver are reliable inflation hedges. During high inflation, their value often grows faster than the inflation rate. For instance, if gold appreciates by 15% in a year, a $1,000 investment would grow to $1,150, protecting your purchasing power. Our next investment idea is cryptocurrencies. Cryptocurrencies like Bitcoin have demonstrated the ability to outpace inflation, with some years showing returns exceeding 100%. For instance, in 2020, Bitcoin grew by over 300%. However, cryptocurrencies are highly volatile and should only represent a small portion of your portfolio. Our final investment idea is high-growth funds. High-growth mutual funds, or ETFs focusing on emerging markets or innovative sectors, often deliver returns above 10%. For example, an emerging market ETF with a 12% return can outpace inflation while diversifying your portfolio. Let's take a closer look at how inflation impacts purchasing power and how the right investments can help you stay ahead. Here's an example. We start with $100 in year one. With a 10% inflation rate, the price of an item increases to $110 in year one, $121 in year two, and so on, reaching $161.05 in year five. Meanwhile, with a 12% investment return, your $100 grows to $112 in year one, $125.44 in year two, and so on, reaching $176.23 in year five. By year five, your investment not only keeps pace with inflation, but also increases your purchasing power, allowing you to afford the item and still have money left over. This example shows why it's crucial to aim for investments that outperform inflation. If you'd like a copy of this Excel template or need help calculating returns, leave a comment below. Don't forget to like and subscribe for more actionable financial insights.